Good afternoon, everyone. Welcome to the class on investment management. So yesterday we had started about what is technical analysis, how technical analysis is different from fundamental analysis. So I'll forward this PDF to all of you. So what you need to do, you need to just go through the basics on technical analysis. VTU will not gonna ask you much more difficult or complicated questions based on technical analysis. Basic questions they're gonna ask as per the previous year question paper. I saw two kinds of questions which are coming. One is the calculation of exponential moving average, and the other one is the calculation of RSI, so relative strength index. So we'll discuss about them. So I believe you just need to go through the basics on technical analysis, and if you have done the basics on technical analysis, then your work will be done for your exam preparation. If you want more knowledge, probably you can get more knowledge if you refer this PDF. Okay, so whenever we talk about analyzing in stock, so that analysis you can do by two ways. Either you can follow fundamental analysis or you can follow technical analysis. So fundamental is all about analyzing the characteristic of a company in order to estimate its value. In fundamental analysis, we follow mathematical process to determine the intrinsic value of the stock. And in case if the stock is trading, in case if the stock is trading above the intrinsic value, then we will not buy that stock. But if the stock is trading, if the stock, sorry, in inverse of what I'm saying, if the stock is trading above its intrinsic value, then we should buy that stock. So in case if the stock is trading below its intrinsic value, then probably we should not buy that stock. So basically, whenever we do investment in the market, so either we can follow fundamental analysis or we can follow technical analysis whenever we talk about investment. So here there are a lot of fundamental analysts. Like if you talk about Warren Buffett, I hope you have heard of Warren Buffett. So Warren Buffett runs a company called Berkshire Hathaway. So Warren Buffett is basically he's a fundamental analyst. So whenever we know about Warren Buffett, or if you try to get information about Rakesh Jhunjhunwala, so they are basically fundamental analysts. Their work, whenever they do investment in the market, their work is to identify those stocks which are undervalued, and so probably their value is more, but they're trading below its value. So in case if you buy those kinds of stock, then definitely you can make fortune in the future. So the investors like Warren Buffett or Rakesh Jhunjhunwala, they try to search those stocks which have lot of potential in the future. In order to do that, they prefer fundamental analysis. So that is the ideology of Warren Buffett or Rakesh Jhunjhunwala. You can spend some time reading about how Warren Buffett became the second richest person in the world. You can see his net worth is more than $80 billion as per the October 2020. Okay, and so what is the investment strategy of Warren Buffett? If you want to understand, there are a lot of novels also called Buffettology. So you can read Warren Buffettology to understand about Warren Buffett, how he did. So what is the Warren Buffett philosophy? So he followed Benjamin Graham School of Value Investing. So Benjamin Graham was the investor. He was the person who talked about the principle of compounding. Okay, and this ideology is called as value investment. So value investor look for the securities with the prices that are unjustifiably low based on its intrinsic worth. This is not universally accepted way to determine its intrinsic worth, but it is more often estimated by analyzing the company fundamentals. So they try to dig into the fundamentals of the company, who all are the value investors. They look into the profit and loss statement, a balance sheet, cash flow statement. They do ratio analysis. They try to find out those stocks which are intrinsically which are valued, which can outperform in the market in the future. So any investor who want to beat the market, either it's a fundamental analyst or either it's a technical analyst, they don't follow efficient market hypothesis. and ultimately the purpose of doing investment is to make sure that they can achieve the return better than the return what the market can achieve. So Buffett methodology, you can read about Buffett methodology whenever you get time. So he give lot of emphasis on the company performance, the management of the company, the business model of the company, the debt of the company, debt equity ratio. That is again very important consideration. More debt in the capital structure, not good company for the long run. So more debt will bring more risk, that financial risk for leverage. What we talk about profit margin, so all is the company public company. So if their company is a public company, then it will be more regulated and more transparency will be there. Profit margins, when we talk of profit margins, profit margin can be a gross profit margin, it can be operating profit margin, it can be net profit margin. So if there sudden differences come between one margin to the other margin, that can be because of the lot of variable cost, it can be because of the lot of debt in the capital structure. So all that can be easily analyzed or can be easily understand if you simply look at the profit margins of the company. Okay, then commodity reliable. So what the commodity, what the company is selling, the end product. So what is the demand for the end product? What is the prospect for the end product in the in the future? All that is being observed by Warren Buffett. So you can whenever you spend get time, please read more about Warren Buffett ideology of doing investment. So when you follow Warren Buffett ideology of doing investment, that is what fundamental analysis is all about. But when we talk about technical analysis, in the case of technical analysis, what we believe that the market will come back. So whatever has happened will happen again. That is the ideology of technical analysis. So whenever we follow technical analysis, we look into the historical price and volume of the company, and by looking at the historical price and volume of the company, we try to identify the future prospects of the company. So in the case of technical analysis, we don't look into the fundamentals, balance sheet, P&L, all that we don't do. We simply look at two factors. One is called price, another one is called volume. Okay, so the maximum they can go up is called resistance. The minimum they can go down, that is the support. Okay, so then when between the support and resistance, then we do lot of mathematical calculation by looking the graphs. We create charts. We try to create oscillator, and ultimately the objective whenever we do technical analysis is to predict the trend. So trend can be uptrend, it can be downtrend. So whenever you see the historical price and volume, ultimately what you try to do, you try to determine the trend by using the indicators and an oscillator, where the objective what we believe on the case of technical analysis is that the history repeat itself. And then only thing is that we need to find out the possibility of that history to repeat itself. So to get the data, so either you can manually do the technical analysis, or you don't have to do the manual calculation. You just go to money control. You go this website called money control. So like you can see this article scheme. So top 10 stock that can give 26 return in 12 months. So like this, like this you can do that. Today you can see the market is going down by 0.22%. So anyway, forget that part. So here what you do need to do, whichever stock you believe you want, need to keep an eye on that. Just type there. Now you got the stock. Now once I got this stock, now what I'll do, I go to the technicals of that. Go into the technicals of that. So you can see this technical analysis of that. Simple moving average. This is 5 day simple moving average, 10 day, 20 day, 50 day. So you can compare the moving average one with the another day moving average. You can do that. You can see this, all this, you can do that. If I click on technical chart, so I click on technical chart. So these are the, you can see this is candlestick model. Candlestick model. So here when you see the candlestick model, so when you're observing this candlestick model, this red color, what you see, that means whatever the red color diagram, what you see, that means that the market has went down. And the green color diagram, what you can see, that means the market has went up. Okay, so if I see this, I take the screenshot of this. Now, now if I take the screenshot of why the screenshot is not. Now you see this technical analysis. Now you can see this. So now you can. I'll explain you this diagram. What are these? So you can see this. This is like downtrend. Downtrend. You can see this is downtrend. Now this up down. So you cannot trust this trend. Then you can see downtrend. Now this again up down, too much volatility. So just a profit booking people were doing. Again you can see a very big downtrend here. Okay, then go up down, then you can see uptrend. So this is called uptrend, and this is called downtrend. This is called downtrend. This is called downtrend. Now now here what you do when we do technical analysis, so by using technical analysis, what we do, there are a lot of tools are there in technical analysis. So you can gradually study those tools whenever you get time. So whenever you get time, you can gradually study those tools like so basic charts. One moment. One moment. So here, these are the tools which we need to study one by one. Bollinger Band, exponential moving average, envelopes, parabolic SAR, simple moving average, indicators are there. These indicators are there. Then drawing are there. So you can, this is a line diagram, what you can see. Then if you want, you can draw a candlestick model or open, high, low, close. This is line if you want. This is open, high, you can see this open, high, low, close. So you can see this part, or you can draw candlestick diagram. So how to draw this diagram, all that I'll teach you. So there are lot of tools are there in technical analysis. Whenever we work on technical analysis, here these trends are there. Ultimately, whenever we work on technical analysis, ultimately the objective is to identify the trend, and whenever you get this trend, how to determine the strength of this trend. So if you talk about determining the strength of this trend, so if you want to determine the strength of this trend, for that we follow ADX. So like if this trend is developing either uptrend or downtrend, how will you identify the strength of this trend? So for that we follow ADX. ADX stand for average directional index. So altogether, a complicated mathematical process is there to work on EDX. So whenever we work on EDX, this is the calculation of EDX. So, so altogether, if you want to identify the trend, we follow EDX to identify the trend. So all this calculation we do to identify the trend. So this all this mathematical calculation you need to do to find the EDX. So once you get the EDX, now once you get this EDX, so once you get this EDX, so this is final ADX value. This is the final ADX value. This is the final ADX value. So if this value more is this value, better is the possibility of that trend. So ADX, what ADX basically tells you, ADX only talks about the strength trend. So bigger is the ADX value, more stronger is the trend. Okay, I'll develop a separate video of the calculation of ADX. I'll develop a separate video for you people, anyone who would be interested to know more about EDX, I'll do a separate video for that. Uh, to find out to figure out how the EDX is being calculated, but I know many of you won't be interested in all this. So I'm not going detail on this part. Anyone who is interested, he or she, they can go through my separate video on the calculation of EDX and how EDX ultimately tells about the market. So EDX is not telling you that the market is going up or the market is going down. It is just telling you the strength of that trend. So higher is the value of ADX, more stronger or more possibility is that that trend will continue. That what ADX is all about. So I hope you are understanding. ADX only tells you the strength of the trend. So the trend what you see, how stronger will be the trend. That is what ADX will tell you. Ultimately, whenever we do technical analysis, in case whenever in the technical analysis, whenever we are trying to identify the trend, so the trend can be either uptrend or the trend can be either downtrend. So the possibility whenever you see a trend, like suppose if I see this graph, now when I'm seeing this graph, ultimately I want to know that if this market is going down or the stock is going down, how much the stock will go down? Will it continue like that, or there's a possibility of trend? So is there any possibility of trend reversal or this trend will continue like that? So to do that part, to work, to do that part, we basically look into the value of ADX. 1 minute, 1 minute. Sorry for inconvenience, guys. So so this now many would be wondering what this diagram is all about. So this diagram, what you see, this is called candlestick diagram. To study about this candlestick, this diagram, we call this diagram as a candlestick diagram. If you want to study about candlestick, forward you a separate Word document for you. If you want to study about candlestick diagram, you can read this candlestick diagram. So in this candlestick diagram, what you see, you'll see two kind of body. Either this is hollow body or this is filled body. You can see this is hollow body or this is filled body. Here you can see, like, here you can see red and green. So red means here bearishness and green here means bullishness. So here also you can see the same thing. So it depends. So don't get confused with the colors and all. So understand one thing. So here when you see this here, red means bearishness. Okay. I hope everyone understand what I'm saying. So red color, what you see, that red means bearishness. Bearishness means the market has went down that day. Okay, and the green color, what you see, that is called bullishness. The green color, what you see, that is called bullishness. Bullishness means that day the market has went up. Okay, so please understand the red and green here. Now, when you now same thing here, I am using with white and black, so don't get confused with that. So both mean same thing. So here, this what you can see, this is called as body. This we called as a body. This is the body. This is the body. So this is the body, and this is the stick. This is the stick. So this is the stick. So this is called body, or this is also called candle. Okay, this is also called as candle. That's why this model is called as candlestick model. Okay, so when you try to study candlestick model, so this means when you see this body, this means closing price. This means closing price means opening price. Okay, so the top of that body, that is the closing price, and the bottom is the opening price. So whenever the market has went up, whenever the market has went up, this means the market has went up, this means the market has went down. So whenever the market has went up, then the closing price will be higher than the opening price. Everyone understand, no? Whenever the market has went up, that means the closing price will be bigger than the closing price will be bigger than the opening price. And whenever the market has went down, whenever the market has went down so whenever the market has went down, market went up, so this is market went up, so hollow body, so this means this is the closing price and this is the opening price. And if the market has went down, if the market has went down, means you get like this red color or anything like that, or black color. So it means that day the opening price will be bigger than the closing price. And so the day when the market go up, that day the closing price will be more than the opening price. And when the market has went down, then means the closing price is less than the opening price. Fine. So this is the basics. I hope everyone understand this. So the day when you see this, the day when you see a red color or black color diagram, means that day the market has went down. So whenever the market went down, it means the opening price would be higher than the closing price. Whenever the market went up, means the closing price is higher than the opening price. Well, okay, fine. Now on this, you see some sticks. So you see some sticks like this. So this is the highest price, and this is the lowest price. So longer is the stick, more is the volatility. Lesser is the length of the stick. Less was the volatility on that day. So if you see this diagram, so if you are seeing this diagram, now you can see this red color. Red color means, what do you mean a red color? Red means the day the market has went down. So this was the opening price and this was the closing price. And you can see the highest price is very less. If you visualize, if you see this, I cannot make it more bigger. So this is the highest price. So highest price and opening price was more or less same. And you can see that this is the lowest price. So what that mean? That it means that day the whichever the price the stock has went up, it whichever the price the stock has opened, it went up little bit further, and then it went down like anything, and then before the market closed, just closed little bit above it. So means that day was complete bearish day. This day was complete bearish day, means that the stock opened with some value, it went up little bit only, and then it only fall down only. That this is what happened on that day. This is what happened on this day. Again, you can see this. Again, you can see this. So this here, this means opening price is the highest price. Because there's no stick, and you can see this is the closing price and this is the lowest price. So means market went up, it went down like anything, and then closed little bit above it. So this kind of diagram what you get. So whenever you get such a big body, if you get such a big body, it means that day was full of bloodbath, or too much the stock has went down that day. Okay, so the when you see, so this is what we basically do in candlestick diagram. So in candlestick diagram, I'm going to forward this word document so you can read about them. So what happens? So this was first proposed by Japanese rice trader. Now we used it everywhere. So you can see this kind of diagram. This is called marubuzu. These all are Japanese term. So if this is white marubuzu. This is black marubuzu. So this here you can see opening price was the highest price and the closing price was the lowest price. Okay, here the closing price was the highest price and opening price was the lowest price. Means white marubuzu means market has went up only. Okay, black marubuzu means the market has went down. So these are like this kind of formations happens. If you tomorrow if you work in any brokerage companies, so you will work on this candlestick diagram. So these are terms are there: long, upper shadow. This means what? This means too much volatility. When you get this means too much volatility in the market. When you get this means too much volatility in the market. So this you can see this was the opening price, this was the closing price, this was the highest price, this was the lowest price. Market went up, okay, then it went, market opened, it went up like this, it went down like anything, and then it closed somewhere below it. So that different, because if the body is small, if the body is small, means there's not much difference between opening price and closing price. So bigger is the body, bigger is the difference between opening and closing price. Smaller is the body, means there's a very small difference between the opening and the closing price. But within the day, too much volatility happened, and ultimately where the stock closed down, that ultimately help you to understand the body. So the body can be, diagram can be like this, diagram can be like this. Okay, so these all these diagram are different. Here this means little bit of market tomorrow will went up, because because it closed near to the highest price. You can see this, no, you can see this diagram, like it opened like this, it went up like this, it went down like this, but when it closed little bit above the closing price, means it's ending with the positive note. Okay, so if you see the diagram like this, 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 this is the closing price, this is the opening price, this is the lowest price, this is the highest price. So it means the market went up, markets opened, then it went up like anything, then it went down like anything, then it closed just little bit above the opening price. Okay, so it's close a little bit close to the opening price, but here when you see it is shifting down, you can see, no, it is shifting down. So this opening, closing, and lowest price all are very close to each other. Means this is not important, because whatever it went up, maybe it just went up for profit booking. It has just went up for profit booking, because these all are waste. Ultimately this matters. It went up like anything, again everything got digested, and it went down like, and then it closed close to the price where it opened, little bit above it. That's why it is hollow body, otherwise it would have been black body. So you're getting the logic of this. So these things you can study. You get time. This is called doji. This doji is very important. Whenever we see doji in the candlestick diagram, we believe that it talks about the trend reversal. So whenever we see doji, means the trend reversal. Whenever you see doji, it means if the market is going up, suddenly doji come, means the market is gonna fall down. Okay, so doji is the trend reversal. So whenever you get the doji, it means now if the uptrend is happening, now definitely the market is gonna fall down. If downtrend is happening, means the market is now gonna go up. So whenever you see doji, you need to be careful. When doji basically means whenever you get a doji, whenever you get a doji, doji basically means your opening price is equal to your closing price. This is your highest price, this is your lowest price. So whenever the doji has came means now expect the unexpected. If the market is going up, means doji came means now the market is going to fall down. If the market is going down, doji came means now the market will go up. To to work on the doji, like how much you can trust this doji, you can look into the calculation of OMV, on balance volume, or you can see ADX to identify the strength of this doji, to understand the to get more confidence on the formation of doji. You can look into the OMV, on balance volume, and ADX, average directional index, to get more confidence whenever you see the doji. Clear, everyone? Anyone have any doubt, any question you want to ask? So this is very important. Now I'll show you how you can do this by yourself. So either you can see this candlestick diagram here like this way. Okay. So if you want the ADX, you can. If you want to see you just click on ADX. If you click on ADX, you can get the ADX value also. So if you click on ADX, you get the ADX value also. You can see this ADX value. So you can get the EDX. So just observe the EDX. So more is the EDX, the more is the possibility that the trend will continue like that. Now you in ADX, when you see this ADX value, here you can see two terms. One is DI, plus DI and minus DI. So mathematically, if you want that value of plus DI and minus DI, all that you can calculate here. All this, all this you can calculate here. All these calculation I have done already. I have done all this calculation. So all this calculation I've done here already. I'll make a separate video on this part. So I don't know, many of you are won't be interested to see the mathematical part of this. If you're interested, you can watch that video to understand more mathematical part of that one. So this plus di minus di, how you got this di? So mathematically you can get prove all that. Otherwise, if you don't like maths and all, so you just simply see the ADX value. So bigger is the ADX value, more is the possibility that the trend will continue. Here, if I see ADX value is very less. So all between 20, 30, 40, it's not going beyond 40. Means not going beyond 40, like 40, 41, you can see. So you can understand the strength is, there's no strength. There's no not at all any strength in the market or in the stock. Means you can expect the unexpected because the ADX value is very less. Because the ADX value is very less, so expect the unexpected. So you have in control, you can do this by yourself, or mathematically if you want to calculate, then I have Excel sheet. You can follow my calculation to get that value of ADX plus DI minus DI, all that. Now how to get the candlestick diagram? So for that, go to NSE website. Go to NSE website, any stock, whichever stock you want. You just write the name of the stock, suppose Reliance Industry. So I'm taking the Nifty value of that, not the Sensex value. So, okay, this is Reliance Industry. Now what you do, historical data, click on historical data. And then whichever you can just select the date, click on get data. Once you get that, then download this file. If the download is not happening, many times download will not happen. Just copy the data. Just copy this data, go to Excel and paste it here. So if I paste it here, so I got their values. Now you can see this data is in 17, 14, 13 like that. So I want, so you can, this data is from 18 August to 17 November. This data is like that. If you want more than 3 month data, if you want more than 3 month data, then you can click on more than 3 month, click here. Okay, and here you can search all that. Oh, fine. So now once you get the data, first thing I want to do, I want the data in ascending order, means from August to November, not from November to August. So apply filter. So just apply filter. So then I'll say just taking two cells. That's why this problem is. Just remove the margin center. Apply filter here. One. Now 1 minute. Now let me apply filter. So I hope everyone understand basics on Excel. Apply filter, sort or oldest to newest. So when I sort oldest to newest, I got the data 18 August, 19 August. I got the data like this. Now this is the data till 17 November. I got the data. So once I got this data like this, once I got the data like this, what I'll do. So if you want candlestick diagram, for that go to insert. Under insert, go to charts, go to charts. So here go to stocks. So go to stock. Here under stock you can draw this diagram. High, low, close. This is candlestick diagram. Open, high, low, close. This is volume, high, low, close. This is volume, open, high, low, close. So whichever way you want, you arrange the data. So if I say this date, take this date. Okay, 1 minute. So remove this. Open, high, low, close. Just So you got date, open, high, low, close. Now you simply select this. Now you go insert, under insert, more charts. Here go to stocks, open, high, low, close. Okay, still not happening because although I added the data, that's still no problem. Just copy this, Control C, go to new sheet. Go to spatial F5, visible cells volume. So once you get this, select the data, go to stocks, open, high, low, close, press OK. You can see this is the candlestick diagram. This is the candlestick diagram, what you get. This is the candlestick diagram. So too much data is there. That's why you're getting very small. Let me take less data for you. You can see this. I've taken less data, so you can see this. So this is what you get. This is the candlestick diagram. So you can see this. This was the highest price. This is the lowest price. You can see this. Okay, this hollow body means the market has went up. So this the closing price is more than the opening price. So you can see this. So this black body means what this black body means, the market has went down. You can see this, the market is going down. You developed a trend. It developed a trend. Then it's somewhat like a doji has developed. So then again it went down. It was supposed to go up. Then you can see it went up like this. So it's only because of profit booking. Maybe they were doing circular trading and they just did profit booking. Again it went down. So it's somewhat like a doji. So this black color, what you see, that means that day the market has went down. Or this white color means that day the market has went up. So this means this was the closing price, this was the opening price, this is the lowest price, this is the highest price. So you can see that too much positiveness of the would be there on the stock. So you need to check on this date what has actually happened, why this stock has went up like anything, although previously this stock was going down only. So why suddenly that day the stock has went up? So you have to try to understand the reason. It's like that day the company have declared some result has came of the company because of which the stock up like this way, or it's just because of profit booking. Any corporate announcement or any big announcement was done on that company, so that means mathematically or logically because of that reason the stock has went up, or simply just went up. Maybe there was a profit booking which were done by few investors on that day, and that ultimately made the market to go up like that. So if you want to confirm this data, so what you can do, you can draw the candlestick diagram with volume. So if you draw the candlestick diagram with volume, you can get a better understanding. If volume is also going up and the stock is also going up, means you can understand there is a there is a strongness, means that is because too many people. Volume is what, the depth of the trading. So the depth, how many people actually participated in the trading, that you can understand with volume only. Volume is also very important whenever we see the stock. Whenever we look into, we need to also look into the volume also. So whenever we get the volume, but volume gives a better understanding of the stock. So whenever we look into the stock, so here, so if I take the volume, so if I take the volume, if I take the volume and put it here, okay, now what you can do, now take the data, go to insert, go to data, insert, write down the date, select the data, go to stock, here high, low, close. This is volume, high, low, close. Volume, open, high, low, close. So you can see this. So with volume, you can see this. How much is the volume that day? How much was the volume for the trading? So you can understand. So if more is the volume, so if you see, yeah, so if you see more is the volume, and then that uptrend, then that day the stock has went up or went down, means yeah, there is a possibility that there is like lot of people participated. Whenever you see volume, volume actually help us whenever we look into the volume. So volume actually help us to understand the depth. Like you can see this day too many people participated, and this day the stock has actually somewhat is making somewhat like a doji. So yeah, you can trust on this data. Okay, so volume again plays very important role whenever we are trying to analyze a stock performance based on the candlestick diagram. So like that here, whenever you go to money control, here when you are checking in money control, so whenever you are checking in money control, you are trying to draw chart type. This is candlestick. So you click on candlestick, open, high, low, close. If you click on open, high, low, close, you get this. So this the data. This the same thing you can do in Excel also. Same thing you can do in Excel also. You go to insert. So if you just need to go to insert all N B M, then if you go to stock, you can get the same thing. So everything is possible. You can do from yourself only. So this I really suggest everyone to go through. I'll forward you the PDF. I'll forward you the Word document about the candlestick model. I'll really suggest everyone to please make sure that you go through them to get a better understanding. 1 minute. To get a better understanding of the stocks. 1 minute. Anyone, any doubt? Any doubt, anyone?